Good afternoon, traders. Mark here from the Day Trading Room. Coming up to 20 to 7 London time on Monday, the 21st of March, and run through the trades very quickly for today. Last week we had the webinar, which some of you attended. Thank you very much to those of you who did, and thank you for the feedback and suggestions going forward. It was good fun. I think everyone enjoyed it, so definitely going to be doing another one of those. Look out on the blog for a date to do the second part of that webinar. We'll talk about some trader preparation, bit of psychology, bit of setting stops, and I'll probably touch on how I use indicators. So yeah, look out for that. For those of you who didn't make it to the webinar, I've put a recording up. It's not actually the webinar that I did on Wednesday. It's very similar. I had to re-record it because I forgot to press the record button on Wednesday. So it's not actually a live recording. I redid that over the weekend. So those of you who came, you can re-watch that, and you'll notice it's slightly different. Exactly the same topics. And those of you who didn't come, you can take the opportunity to have a look. So let's talk about today's trades. Last week's trades, there was really nothing exciting to talk about. It's all, I think by now you know the sort of setups that I take with doing the webinar and what have you. I didn't get a chance to do any updated videos. But it's pretty standard stuff. But we'll run through today's trades. The Dow was very strong, very strong at the open, and I actually did something a little bit different, which I don't normally do. But the Dow was strong at the open, so I'm looking for a pullback to go long. But then I was thinking over the weekend actually about the attacks on Libya. 110 cruise missiles so far they'd fired at $600,000 around that per pop. That's a lot of missiles, and the company that makes them, RTN. So what I decided to do, as the Dow was strong, I was looking for a pullback. I thought what I'd do is I'd buy some RTN at the open, looking for a push up, and if I basically thinking, okay, the Dow's strong, so if I'm right on that, it should push up stocks. If I'm and also I'm expecting a little bit more push based on the fact that these are the guys that produce the cruise missiles. I haven't done any more research than that. Someone's going to email me and tell me, oh yeah, but it's only 5% of their revenue is in missiles, and then not ordering any more or something. Okay, I may have missed something. I may have missed something with that, but it's a trade based on the price action, based on what I thought on the Dow. Anyway, bought some at the open. Closed half of it as we got up here and just couldn't push any higher, and then really I just thought, okay, well, you're just holding this for the sake of it now. Close the other half as we start to push back down. So that was that. A little bit different. Obviously manageable size, nothing crazy. Second trade for me on the Dow was after the data. The data had come out at 2 o'clock London time. It caused it. It was worse than expected, but that market didn't go down. So if it's worse than expected, there's a catalyst there to send it lower, and it doesn't go lower, then I'm looking for a buy. So there was my buy. Had to sit with it for a bit. Got a nice little pop up, and then just scaled out as we pushed higher. So pretty normal trade really. But the sort of premise behind that was data came out. I was waiting for a bit more of a pullback all throughout this, even though I had my RTN long. I was looking for a pullback all throughout this, didn't get anything, waiting for the data. Data wasn't as good as expected. I sold it a little tiny bit, couldn't get much lower. It found some support, so I'm a buyer. That was that one. Interestingly, every trade after this, I only did one more trade on the Dow so far. I've only got an hour to go. Don't think I'll do any more, and a few oil to show you, but none of them have actually hit my final target. But I've still made money. Now, that's something to do with managing a trade in terms of scaling, understanding that you can be right with the initial direction, but you may be wrong with the final target. And that was a little bit what happened here with the Dow. We rolled back over. First oversold here on the 3 minute. Just tagging the VWAP. The scale's a bit out of proportion. Let me readjust that for you. the scale's a bit out of proportion. There we go. You know, tagging the VWAP there, oversold, starting to turn up. So you know, I'll take a long here. It went against me a little bit, not enough to stop me out. Got the push up, scaled half. I'm looking for a new high. You know, it makes sense. That's the premise of the trade. Very very strong market. First longer term counter trend, and then a push up, scale into the cycle high and to new highs. But didn't get it. So technically I was wrong on the trade, and if I had just been stubborn with it, I would have ended up with a break-even trade. But in this case, I ended up taking you know, a nice profit on half and a break-even on half. Fine, I can live with that. Pretty similar on oil, really. Let's bring in oil. Don't forget we're on the May contract now, which changes things slightly. But oil, I you know, was focusing more on the Dow. Got to stop out on oil first. Well, it wasn't first thing. It was actually simultaneously I took that Dow trade. We'd push lower, and I'm looking at this gap here to 102.43. I'm still thinking, you know, that's at that point I'm still thinking, okay, that's our target there. And you know, we pushed through the 103, held below it, pushed back up, couldn't get above it, poked above it there, thought, well, that's a nice little premium entry. Took the short, which was actually not a good trade. It went against me, came back in a slight profit, found a bit of support, and then when I just saw it bouncing back up again, I took that out for a loss. So that was you know, the first loser. I'm still thinking, okay, maybe it can go up to the sort of 40 level before it rolls over. And I was aware of that when I took it. I thought, you know, there is potential for a larger counter trend move here. Anyway, it did go up. It started to consolidate. We got that spike higher, which wasn't bought. I took that as a cue to go short. It was almost in my window a little bit early. We started to roll over, so it was around the 40 level. We started. It did go against me slightly, but didn't take out that high, so all good. We're all happy with that still. It started to roll over, almost pushed to 103 at this point here. I gave it another chance. It then just fell short there and came out just ahead of the 103 on half. It went a little bit lower, found support, and then just rocketed back up. And unfortunately for me, because my entry was there, I ended up taking a stop on half at break even. So, what can we deduce from that? We can say that, you know, it was a good day. It wasn't a great day, but what made it not a losing day when in reality all of my premises didn't quite work? Excluding this which was just a losing trade. You know, it happens, and it wasn't too much because it gone against me. It pulled back a little bit, saw the bit of support, pulled the stop tighter, and you know, we didn't get too much of a hit, but took a you know, almost a 40 cent move on this, and then a stop at break even. So and then again on the Dow. You know, took a scale out on this push up, and then a stop at break even, but it doesn't matter because we're still taking half of the table. We're still putting money in the account, and you know, it doesn't matter if we're not hitting the final targets. Of course, we'd like to be hitting them, but if we're not hitting them, you know, it doesn't matter as long as we've got some sort of way of managing the position, so that it's not an all or nothing thing. Because that's pretty frustrating if it went your way on a couple of trades like that, especially with oil. You got a 40 cent profit or so, and then you get stopped out break even. Dow, 20 tick profit and stopped out break even. You don't really want that in a psychological. It's not psychologically beneficial. Very energy sapping. So that's it really. Nothing more to report. I'll be back with another video in the middle of the week. Otherwise, good trading, guys. Keep the risk managed, and I'll let you know about the webinar as soon as I decide a date to go ahead with that. So good trading. Speak to you soon.